Hi everyone, welcome to today's edition of Scouting for Growth. Today I'm meeting with Scott Gunther, General Partner of IAG Firemark Ventures, the corporate venture capital fund of IAG located in Australia. Scott has been at IAG for over 10 years and has been running the venture arm for over 6 years. With strong expertise in marketing, customer experience, among others, Scott wanted to bring something new to the group by opening its doors to the external world to ensure its resilience and relevance for the very long term. During this podcast, Scott and I discussed a few main points. Scott's path to CVC Land. What does IAG Firemark Ventures do to remain top of its game? Talent. And what does remote working means for Scott and his teams? And best practice for startup, scale-up, corporate innovators, corporate investors wanting to build their future corporate arm. So let's welcome Scott. So hi everyone, welcome to Scouting for Growth. Today I'm with Scott Gunther. So Scott is actually with us from Australia, and he will tell us a little bit more about his journey into corporate venture capitalism. So Scott, welcome, and thank you for joining us today.
Thank you for having me, Sabine.
So first, I always ask my co-host to tell us a little bit more about them, about their career, why they got where they are. I know you have been at IAG now for over 8 years, and you've moved into corporate venturing 4 years ago. So please tell us a little bit more.
Yeah, I think probably just sort of going back where I started my career is when you came from university and you've gone back through and you've done either, a Bachelor of Commerce, or you might have been lucky enough to do a Bachelor of Technology. You always sort of don't know where you're going to, end up. You're going to end up and maybe work in a big accounting firm or a big consultancy firm, or you're going to work with a big, corporate. You might be working in maybe one of their divisions like technology or finance or the like. And I was sort of fortunate enough to actually go through and get a blend of both. And one of my first careers coming out of university, after doing the usual internships that everybody tries to do, was actually part of the original dot-com boom back in late sort of 99, early 2000s. And I got to work with Australia's largest telco at the time. And that was pretty exciting part as they were starting to build what was broadband and their web presence, and going back and building sort of a new business and being part of an amazing team who used to wear t-shirts and shorts to work, and trying to do sprints in 90 days and get stuff back out, like everything we hear and see and experience in startup world today. It's not new. It's happened before, and it really sort of happened way back in the dot-com boom. And that's where I started, and I couldn't ask for a more impressive grounding, and working with one of Australia's largest companies and trying to set something up. And I think these were working 90-day sprints to launch businesses and products and services, and thinking about the World Wide Web before it was the World Wide Web, and e-commerce and the like. As a young man at the time coming out of university, probably had no idea what the future was going to really hold. But the experiences of working in collaboration in I guess a digital first and an innovation role, that's where my career started, right? And the ability to do that with a commercial lens, because obviously we're trying to do this to actually build businesses and obviously deliver better customer experiences and make companies money, right, at the same time. When you're very young, you probably don't really appreciate the lessons that you learned at the time. And my career allowed me to continue to build on that blend of both digital technology and innovation, but also have a very strong lens to strategy and business development, sales and marketing. And it's probably a really interesting sort of skill set that I've always actually had is a combination of both those digital first technology innovation, but also some of those commercial and business skills. But I was always a big believer in breadth and depth of experiences. So my journey actually took me to different parts of the world for roles, but also into different industry verticals to try and get yourself to point you up. But there's probably always an underlying passion to work in financial services and insurance, and like a lot of people, and actually been now in the insurance game. It's actually probably a little bit longer than that, Sabine. I've actually been here for a bit longer than now, 10 years. And one of those things that you fall into insurance. And once you fall into insurance, you stay there. And I was fortunate enough once I joined IAG to get into roles of, building on my skill set. I helped set up and run, digital marketing teams, and got to run customer teams, and got to run, some innovation teams, and do the same things I did right when I first came out of university. And it was actually about 6 years ago, I think now, our corporate VC sort of started to come together. And it's a little bit like insurance. Sometimes people fall into venture capital as well, and people sort of fall into corporate VC as well, right? You get to this situation where you're thinking that you're either going to disrupt yourself or you're going to be disrupted. And I was very fortunate enough to be in an organization that believed in this. And we had some really passionate leaders that wanted to try and innovate at the edge, and take that philosophy of, either disrupt yourself, otherwise you sort of get disrupted. And, it took a little while to get our corporate venture capital unit off the ground. But, for the last 6 years we've been going, we've now got 2 funds, and we've got now a team of, there's 8 of us, and, $150 million of funds under management, 21 portfolio companies, and 14 commercial agreements as a strategic CVC, and, investments from all over the world. And we're continuing to take that footprint more globally. But our fundamental part around why we do what we do is to bring the outside world in to try and transform how we deliver insurance. And that means that every day is different, because as you're starting to look at, global macro trends, or you look in different markets and see what's working, or you look at different parts of the customer journey. We're working with consumers to businesses to agri and farmers as well. Like, there are no 2 days that are the same. So, I think one of the things that, I give advice to everybody, right, is going back to that breadth and depth of experiences, especially as you're starting to get to here. The more that you can experience, whether it's industry or role or function, geography, it really sort of sets you up. And if you look at really successful CVCs across the world, they're made up of teams that have actually got really diverse skill sets. So yeah, hopefully that gives you a bit of insight on my journey, Sabine, and how I got here.
Yes, fascinating. And some of the item I'd like to dive into is, you already mentioned you started working on product and services in 90 days, right? What we call sprinting today, right? You try it 8 to 12 weeks, it doesn't work, walk away. If it works, goes to the next phase. You also mentioned already that to build something really positive, you need to be, I would say, a generalist, but multi-skilled, from marketing to customer experience to touching different part of the organization. And lastly is being curious about where your path will take you. And so my question is, when you look at the group you're working with, what is the vision? What is the culture? How is it to work for a big corporate and having been able to build your business within a big corporate?
Yeah, look, that is a really fundamental part of why CVCs fail or CVCs are successful. You still have to remember, you're part of something a little bit bigger, and that corporate has its own purpose. And at IAG, our purpose is to make your world a safer place. We are there to ensure customers, and their assets and their businesses and their livelihoods and a whole heap of other different sort of risks, right? But also not just being able to ensure and protect them. If the incident or a claim ever happened, be there to help them to recover. So one of the big things that we have really tried to strive to do is be very purpose-driven, and working for an organization that is purpose-driven actually gives you something to build backwards from, but also gives you something to aim as a North Star to go all the way. So to do that, I think any CVC has to make sure that they don't feel like that they're just some little adjunct of some sort of corporate. They're a really integral part of their business. And as a consequence, you've got to know your business inside and out. You've got to know the business strategy. You've got to know the business's economic model. You need to know the business's different customer journeys and pain points and opportunities. You need to know, what the different disruptions are. And I see that, especially as a corporate VC, those who are really intrinsically in tune with understanding the business, but also with the relationships across the business and the industry, are the ones that are probably more successful. And that's what we model ourselves on. We look at a lot of CVCs across the world, and we see those who have done really, really, really well. And that's something that we actually start to follow as well. So as a corporate CVC, you start to sit there and go, we have to realize that our corporate in many ways is our internal customer as well, right? And our customers' customers are the corporate's customers in ways. So we sort of always sort of think about it from those lenses as well. But what we also think is our purpose as a CVC is to actually bring the outside world in. and transform how we deliver insurance. So we sort of have this, sometimes I look at it, sometimes we have this right that we actually have got this, CVC that we're running. But we also have this responsibility to our corporate and to also our end customers as well, to actually help shine a light to the future as well. So with a little bit of that servant leadership that we also start to think about that's required from, not just myself, but also our team. And unless you really understood your industry and your customer, internal customer and the end customer, you wouldn't be successful for that. So that's probably a little bit of the secret sauce. We think we've been able to, we haven't invented this ourselves, but we've been able to learn along the way, but also observe and spend a lot of time with really successful CVCs to see how it gets done.
So, hey, Scott, you mentioned another key point here is looking for me at the 3 horizon model, right? Efficiency innovation, sustaining innovation, and game-changing innovation. So how do you actually split across the 3, as you said, that you have an internal customer which may want to improve processes? So tell us how you do that.
Yeah, we look at it and, we've gone through, you look at it horizons, you look at it, whether we've got, investments and activity that's active with the business right now, and you've got stuff which is, thinking about it's a bit more sort of future out. I think some of the stuff that we've started to really get razor sharp on has actually been the work that we're doing in terms of scouting the world, looking for startups with, amazing emerging tech or unique sources of data or disruptive business models, whatever it might end up be that actually can help us, transform how we deliver insurance. We're going to look through the lens around, is it going to actually help us accelerate our current strategy? So if we look like our business and our business's strategy, is what we're going to do actually help them accelerate what we do? So that's sort of the first lens we're looking at. The second lens we go, well, the same ethos applies, emerging tech, disruptive business models, unique sources of data. Is this actually something that maybe could actually future-proof our business? That may actually end up being a little bit further out. Now, that actually is an interesting way to think about it, accelerate strategy or future-proof your business. But you might also take, and we look at it in another way as well, actually, you might invest in some emerging piece of tech, and we might actually make a passive investment. And we might actually say, we're going to invest so we can learn and we can start thinking about what that might mean to actually future-proof our business. But at the same time, we might actually see that there's an amazing piece of emerging tech that we want to actively use right now that can accelerate our strategy. So we also have this other way we look at things. When we invest, is the startup going to be actively working with our organization, or is it going to be passive and we're going to just sort of take a little bit of time to watch and learn, to go back through? And they can take those same things, like we said before. That could be, if you're active, you're helping to accelerate the strategy, or if you're passive, you're starting to sort of how do you future-proof the business along the way? So that's how we're starting to really look at things right now. And it seems to be working, because I think the other part is Horizon 1s and Horizon 2s and Horizon 3s and the different goes, they change every day, right? So we're starting to sort of see that as we've lowered our eyes a little bit the last sort of 12, 24 months, and what we'll probably focus on the next 12, 24 months, seriously, what are we doing to accelerate the business and strategy? Or what are we doing to seriously help future-proof our business?
So to drive success, you had to put together an investment thesis. Correct. And I would love for you to tell us maybe the difference between, if there are any difference between an investment thesis and innovation thesis. And second is, you had to start somewhere. You had to be successful to be where you are today, right? You said the fund was built 6 years ago. So what are the little things which allowed you to be where you are today? And I know, maybe build a second fund.
Yeah, really good question. And I think the investment thesis, has to be tied to the broader innovation thesis. That's probably where they are, right? They're not mutually exclusive. That's sort of the way we've sort of looked at it, right? That's sort of and there are parts of that, you talk about, you're part of the innovation and venturing function, but is innovation really a function, or is it something that everybody in the organization or everybody in the world has this, opportunity to do? So, we sort of see that, it's part of a broader, innovation framework is probably the right way, rather than sort of function. And, that innovation thesis is actually something that anybody in the organization should be looking to try and do. Because, if you're not moving forward, you're standing still. And if you're standing still, realistically, you're sort of going backward, right? So everybody's trying to move forward. So that's how we've gone through. And when we put our investment thesis together, you actually have to get quite razor sharp on the things that you can and can't do, right? So, you might want to say, we want to invest in every market. We want to look at all sorts of different stages of startups. We want to invest certain, different amounts. You have to probably get quite focused on what you can and can't do. So a really good investment thesis of when you first get going is to give yourself guardrails. Like you might turn around and say, we don't invest in seed stage. We don't actually lead investment rounds. You know, we may not invest into the UK and the European market in our first 12, 24 months, right? You know, there's some really big things that we didn't do just to get ourselves going, right? So, but as you evolve, you can actually expand your investment thesis. So that's sort of like the rationale around that. And as we have grown, our investment thesis has changed. And it's changed for the better, right? Like, for those things, we now can invest in different global markets. We have the opportunity now to invest into seed stages. You know, we don't necessarily go out and lead rounds, but you know, we're participating in different ways and we've never sort of participated before. The technology and data focus areas that we look at today, you know, I don't think in our very first investment thesis, we would have gone and invested into an augmented reality company, right? Like, so there is this evolution that you've got to be able to make to your investment thesis. And I think that's tied to that second question you asked about, you know, it's about how do you deliver success? Like when we first started our first investment, it was like we invested in this crazy little startup and we only made a very, very small investment. And then lo and behold, about 12 months later, it got acquired. So, you know, we started to go, how good's this, right? You've got this financial return, you've got some, wow, really cool technology and data that our business started to use. This CVC thing is really, really cool and really, really easy. And doesn't that make it a little bit a bit of a reality check? Because one of the things, Sabine, is you can see the first 12 to sort of 36 months, it takes time. And most sort of CVCs and VCs have that sort of 8 to 10 year payoff period. But one of the things we did stick true to is we said, if our purpose is to bring the outside world in to, you know, fundamentally transform how we deliver insurance, we had to start demonstrating that. So through a lot of our investments, one of the big things that our ethos is we invest, we connect startup with the corporate, and then we look to make mutual commercial value. And the way we look to start to do that is we weren't a CVC that invested in a startup and then picked the startup up and threw it over the fence to our marketing team and said, there you go, off you go and play, or over to our technology team. No way. As a CVC, we've actually got a team that is responsible, and they sort of play a role of like program management, portfolio management, of working between as like an intermediary between the startup and the corporate, representing the best interests of the startup inside our corporate, and also being the corporate sort of interface to actually work with a startup. Now, why is that important? And if we really understood our business and our customers and our distribution models and our marketing plans and our economic frameworks, etc., we really knew what business problems or pain points the startup could actually solve. And then as a consequence, we can make sure the startup could actually connect accordingly with the corporate to demonstrate success. And that's the kicker. If you're not demonstrating sort of mutual commercial value, then, you know, the corporate will sit there and go, why are we making these, you know, big investments? Why are we actually bringing startups back in? You need to be helping solving a business problem or, you know, helping create an opportunity. And we measure that success as how we've been able to grow to Fund 2, because once we've got our first commercial deal between the startup and the corporate, the flywheel kicks in. And then you get your second one, and then you get your third one, and you sort of get the fourth one. But that's ultimately what we look to deliver success is, you know, how do we bring the startup in to, you know, transform how we deliver insurance? And you need to be able to connect the startup with the corporate to run tests and trials and experiments with tech to ultimately, you know, get into a commercial agreement where that tech data or business model is part of how we deliver insurance. So that's how we've done it. And, you know, we're again, not the only ones in the world who have followed that framework, and you do need to, as a CVC, learn from the best and see how that works. So, and that's ultimately what we get measured on all the way up to our group executive and board and our team as well, right? So
that's super cool. So one thing which I picked on as well is when you put together your investment thesis, you have to be really clear on the things you are not going to do. And, you know, looking at the fintech market today, I believe there was something like 650 billion invested in fintechs so far for the past 10 years. Insurtech represent around 59 billion. So you're around 9% of the overall number. And that would include as well health tech, wealth tech. And it, you know, it has to be really important when you look at this, you know, I think it's 18,000 startups which receive money. Out of that, the one we are still working out their business model is another, you know, 60,000. How do you make sure where everything you do every day is right on target? How you eliminate the noise?
Oh, look, this is the hardest part about being a CVC. Like, VCs have a different sort of lens, right? Pure play VCs are obviously, financially driven. Let's be, be honest. Whereas a corporate VC, even if you're a strategic corporate VC, you do want to make sure you've got a financial gain, but you're looking for a whole heap of other variables as well. When you think about, typical due diligence that you might run to a typical investment, of course, you're going to look at the tech and you're going to start looking at the financials and you're going to start look at their, people and their processes, and you're going to look at their, product market fit. You would get all those sorts of, wonderful things. The two things we always go back in is making sure that it aligns to that investment thesis, right? Like we know that if straight away it knocks out a whole heap of things, right? So it's our guardrails, and what you said before is really big to what we do. It's not just what you do; it's what you don't do. It's a really, really important part. And when you overlay what I said before around that DD, one of the big things that we actually realize is we're actually really investing in people. And you know what? So you can think about, you might have the most amazing business, you might have the most amazing tech, you could go back through. But if you don't necessarily have great founders and great advisors and great boards around them, there may actually not necessarily be a long-term pathway for success, right? But then on the flip side, you may actually have some individuals who are really, really specialized in a certain domain, right? They might be a cybersecurity startup specialist and they know exactly where they may not have the commercial acumen, but they put themselves around a really good group of advisors and people that have run businesses before. So we actually sort of think that part of what that needs to go, Sabine, in terms of filtering stuff out, yes, your mandate is really, really important and the thesis goes back through, getting through all that DD, but the intangible is people. And that's what we actually think, because the people are enduring, right? The CEO, the founder, the leadership team, the advisors, the people who are actually in the business running, and it's not always the same team that started the business is going to finish the business, but it's a really, really important part. And we put a real over index into some of that.
So let's go into super practical things. So what are your 3 bets for the next 3 years, Scott?
Oh, that's a challenging one. I want to give away a bit of the secret sauce along the way. Look, I think the first thing is we would actually sit there and go, and you look at the current financial market conditions, and I was actually reading some stuff over the last sort of couple of days around it. We've started to over-index over the last little bit to look to a lot more early stage and seed stuff. And the realization is because you were rattling off numbers and the size of market. There's been a fair big dent right now already, right? And you've got lots of successful startups that have either been acquired, listed, or they're in the late stage and they're doing really well, and others aren't. But there's this amazing new opportunity that is starting to come back through with a lot of early stage businesses and that's a big index in it, that we over indexation we're starting to start look around, right? Like, what's the next big thing? And some of that stuff actually is starting to see that over-indexing or that focus on seed. Now, some might turn around and say, hey, you can go into a seed company as a VC, you can write a smaller check, get a bigger equity stake, and it might offset, in the future, all the down rounds and the valuations that have, been impacted for some pure play VCs. But we look at it from the lens of actually there's more, emerging tech to come, right? So we sort of start to look at that there. And if you look at the size, I think over the last 12 months, year on year, saw some stuff today, right? The average seed round is, raising about 3.3 million. So the round size is getting bigger. And what you're starting to get, it's the valuations getting larger on seed stuff as well. It's actually probably that and the A stuff that's obviously of more attraction at the moment. So we sort of see that's probably a real big area, and that might sound a pretty easy, bet, but I can tell you, I think that in itself actually requires a really good skill set. You just can't say, hey, I'm going to be a seed stage CVC and just wake up tomorrow and do the job. You're going to need to have a good level of breadth and depth of experience. So that's a big one that we would sit there and go. The next one I think is what's actually happened is the world is really now so connected, right? We actually have this ability that we have a global workforce. We have this ability to partner with a company or, sell a product or service to somebody, in a completely different part of the world. So a big bet for what we're starting to see is to think more global. You don't have to be just playing in your own market anymore. You don't have to buy products and service just sort of locally. You don't have to have talent just from the local, talent pool. You don't necessarily, COVID's probably helped us to sort of accelerate that too. So big part of what we're doing is thinking global and seeing that global and those who are going the way. And you can see how that stitches together with the first one, because what we start to sort of see is when you start to look a lot more early stage sort of stuff, there's great early stage tech businesses, great early stage data businesses, great early disruptive business outside of your normal sort of areas of interest. You've got to look there. So that's already the second big one. I'd say it's a really important one, and those will get that back through. And the third one is this ability, depending on which industry vertical you're actually in, and again they tie to the first 2 points, is that we might be sitting here in Australia, and you're sitting over where you are in the UK. But we might be working in a very, very similar business. We might both be insurance, we might both be in banking, we might both be in telco. But the customer journey, the business problems, the economic models are very, very, very similar. So one of the things we're starting to do is we're starting to think about collaboration with other like-minded businesses in the same industry, because we actually realize that's going to lead to a better outcome for our customers. Because if there's an insurance company, say in the UK, that are trying to solve something, and we're trying to solve it here in Australia as well, imagine we could actually work together and we actually were able to solve the same sort of customer problem and invest in a startup that could actually solve the same problem for an insurance company in Australia, and at the same time solve it for an insurance company in the UK. And we could, share insights and knowledge and accelerate. So to me, they're the big three things. Now, you're probably going, hey, Scott, I was hoping you'd tell me a tech trend, but I just want to give you something a bit different, right? And that's how I sort of see the success of the CVC. Yeah, early stage, starting to think the world is more global, and then starting to partner with other businesses in your industries is probably the biggest three things that I'd see over the next couple of years where really successful CVCs are going to go.
Yeah, I mean, I love those three themes. I wrote somewhat a little bit around digital ecosystems, and my belief is, why try to reinvent the wheel when you can partner with others, and 1 + 1 = 10, and you can actually focus on your core skills and actually augment with others.
Yep.
And I apply that every day in my work and
So
my team. And it's fun because you have to think differently. It doesn't always work to start with, but gradually when you win the trust through authenticity and credibility, you realize that your partners are your extension of your business, and actually you can create something better together. You mentioned something very interesting to me, because in insurance, I think I find it sometimes very difficult, is remote working. You said you are welcoming, working with people from all around the globe, from different culture, from different countries. How do you take advantage of remote working amongst your team, with your team members, and how do you create trust in working with others which are in other markets?
Yeah, it's a really good question. And look, maybe I was, brought up differently to sort of start with my sort of career path. I'm lucky to be working for global companies, back in, the 2000 sort of stuff, right? Where remote working wasn't like it was today. It required a bit of energy and effort and adapting and flexibility. And let me be brutally honest, right? Australia is not necessarily the easiest part to be working in a global environment, because you get the US and you get obviously Asia, and then you start to get the European. So we do sort of sometimes go, we're probably in the worst place to think sort of globally. But I know that was something that was probably, part of my DNA. So it made it for myself, on a personal note. Look, it's just something we've always done, and something that I've always embraced, working through different, industries, different cultures, different layers of, within experiences. And it's just something that I've always, had a passion about, and think it's amazing to see, like we're doing right now, right? It's incredible to think that you're on one part of the earth and on the other, and here we are doing a podcast together. But what I've also been able to try and do is the team that we've actually built is really diverse and actually spread out. Now, it's easy to say your whole team should be located in the one city, but we're not. We've got folks in Melbourne. We've got folks in the other major city in Australia, in Sydney. My boss and our leader, who runs our innovation venturing fund, he's in Auckland, New Zealand. And then we've got a few other folks who are actually on the ground in Singapore at our venturing team. So we sort of actually are sort of global in our own sort of Asia Pac region where it actually is. And I guess that's also a way to use that as an unfair advantage as well, right? Because that actually helps you sort of span the globe and span sort of time zones and sort of be in different markets. But rather than actually, just physically sort of all being in different parts of the world, we've had folks who have actually embraced working with different areas because they've just got that inquisitive mindset. And I think that's probably something that I've always gone to, building teams is something that you really can't really teach, is actually that inquisitive mindset, right? Like that and passion are things sometimes that, very hard as a leader to develop, right? You've either, you know, some people are really, and that's okay. You don't have to be a passionate person, right? You don't have to be an inquisitive person. But I guess in a global role, having that inquisitive mindset to work across cultures, time zones, industries, businesses, etc., makes it really, really helpful. And then if you've got people who are passionate about doing it, it's probably just a bonus. So that's sort of a little bit how we built the CVC, and that's what we try to say. We're really sort of Asia Pac, and as a consequence, we can be really global.
Global is, I think, probably part of the game, right? If you actually want to have a richness of capabilities, of thinking, and actually being able to bring ideas from the outside and actually be at the same time disruptive. So one angle I would like to take you on is some of the trends we are seeing also here in Europe, where we often see buzzwords such as the metaverse, NFTs, Web3, or we also talk a lot about embedded insurance. What's your view around the insurance business model and how those trends would play within it? Because those are some of the questions which often come to me.
It's a very, very big topic of discussion in our business. It's a very, very big topic of discussion in the industry, right? And it's not just here in Australia and New Zealand, it's right across the world. And, you know, I think one of the things is we talk right about the start, you know, whether you disrupt yourself or you sort of get disrupted, right? Like it is so important. And we had a conversation with one of our, you know, leaders who's inside our business, and, you know, was talking about a wonderful story about yesterday to some of us about that he bought a pair of sunglasses and had no idea that, you know, there was an embedded insurance cover already, you know, done at point of sale, and then later on realized that, you know, the sunglasses broke, and then, you know, got a notification and went, wow, I didn't even know that there was, you know, insurance offered as part of when I purchased my sunglasses. I mean, part of it is becoming that it is so invisible in many ways and so frictionless that, you know, what we're sort of getting to, you're getting into different niches. It's stuff that is actually really micro, that it's moving you further up the value chain. It's allowing others to actually enter the market that you've never sort of been into before. That I think what you're going to do is that if you're not thinking about it, you're probably behind the eight ball right now. And if you're starting to do it, that's great. And I would sort of sit there and go, if you fast forward sort of, you know, to where we might be by 2025 and sort of, you know, all the way through to the end of the decade of sort of 2030, it's probably going to be expected, right? Like as you go back through, it's going to be, you know, it might feel like a little bit nascent, and it's, you know, just using that sunglasses analogy, there's all sorts of stuff, you know, you purchase your motor vehicle and it's, you know, already embedded as part of that buying journey, all those sorts of things sort of exist. But, you know, I still think that it's probably nascent by where it will be. And I reckon that in the next 3, 5, 7 years, you know, it will be the predominant part. And if insurers don't sort of catch up and sort of go through that, they are going to actually start to be sort of disrupted by those small, nimble players who are going to try and, you know, offer those unique sort of offerings. So I would sort of sit there and say that embedded insurance, and that also allows you to move to real-time insurance as well, right? Like, so it doesn't have to be a product that's always, you know, done once a year. It can be switched on and switched off. You know, we talk a lot about usage-based insurance, you know, in the motor vehicle sort of space. You know, it's based on, you know, how you drive, when you drive, and like, well, why can't that be for all other products and services in insurance as well? And embedded and real-time are probably two of the bigger things that we're starting to really spend a lot of time on, but we're not the only ones. You know, some of the most innovative companies in the world are doing some incredible stuff on this, and you can see all the disruptors are doing it too. So absolutely, probably one of the biggest topics.
One of the biggest topic. And when you actually start looking at what you are saying, it's not only about distribution, it will probably be also about infrastructure and how you actually putting your, what I call your iOS together and further. So we are going more back end, right? And we are going around that frictionless statement you just made. But then you can also look at digital assets. And still we are looking at, you know, what do we do with these NFTs and this metaverse and this Web3? And I know we have so much other things to solve for in insurance. However, we probably need to start thinking about the opportunity, because it would take us quite a few years to embed those new stuff within our insurance environment.
Yeah, and it's stuff that we're exploring and seeing as well. And then I guess your trade-offs have to be is, like we said, I said it before, that, you know, is this stuff that we're future-proofing the business on, right? Because it's going to be you know, part of mainstream, you know, and a big portion of our marketing, could end up being there. Customers may want custom service. Web3 will deliver different ways of, how we engage and sell, and how our products are sold, and how we exchange information, data, and money. Like it's all on and it's going to happen, right? And it's on the way. But it's a really interesting trade-off, right? So you might look at that versus, say, embedded insurance, right? And you sit there and go, okay, is Web3 in the metaverse going to be something that's really going to accelerate our strategy right now, like over the next 12, 24 months? Or is it something that's going to really sort of future-proof our business? And that goes back to sort of our investment thesis we talked a little bit about before. You've got to have a balanced view of this stuff. Sometimes you can over-index and you might say, hey, all we're doing is focusing on things, and it could only just be embedded insurance, and it could be improving our claims customer journey, and, it could be, things that are actually helping us, improve our digital buy for home insurance or car insurance. And that's really about accelerating straight. And then you miss the next big thing, right? Who would have thought that, real-time sensors collecting data and connected cities and connected cars and IoT devices would actually, move insurance to assurance. But, we made that investment, 3-4 years ago, and we're starting to sort of see those things come through. So it's a really important part that you sort of balance out. So where we're starting to look through is with the onset of the metaverse and the onset of, what will happen with enhanced and augmented reality and what's going to happen with Web3, you're going to have to make some bets. And you're going to actually have to take a few, investments, and you're going to have to spend a little bit of time, energy, and effort, because otherwise you won't future-proof your business. Now, that doesn't mean any of that stuff is going to always pay off to how you think. But, to your point, Sabine, it's going to catch up to you pretty quickly, and then you're going to be sort of left behind. So it's a really interesting way that we look at it is really those two lenses, accelerate strategy, future-proof the business. But you've got to have a balanced view, and you've got to make some of those strategic bets for the future.
Yeah. So listeners of the podcast, Scott, include startups, scale-ups. Mm-hmm. They include intrapreneurs. They include other corporate venture capitalists. And I would love for you to look at those three groups and see whether you could give them some recommendation for those, who are there and passionate of changing our world.
Let's go through group by group. So you talk about sort of startups, right? Like, there's a difference between startup and scale up, right? So, the scale ups, have been through this sort of journey and going through and learning along the way. But one thing I'm really impressed with, what you find out really successful, startups that go through to scale ups, is they surround themselves with really strong strategic advisors. And this is the best bit of advice you can give to any early stage startup CEO, is put yourself around people who have actually done this before, or are really well experienced in actually running businesses or raising capital, or, developing product market fit. The more strategic advisors that you can have, whether they're formal or informal, it actually helps teach you lessons, and actually it teaches, as you said before, it doesn't teach you what to do, it also teaches you what not to do. So my biggest thing for any startup CEO and where they're getting through, surround yourself with as many strategic advisors as you possibly can from all different parts of it. So that's the biggest piece of advice, Sabine, for the first group of startups. So which is the second one you'd like to go to? Which is the second group you want me to touch on?
Intrapreneur. Think about, those innovators within the corporate who actually needs you, right? We need a CVC to help them.
You sit there and go, the entrepreneurs, and I talked about before, innovation, nobody should actually own it as a function. Everybody should have that, right to be able to go back through. And I gave a couple insights around that too. Entrepreneurs are really inquisitive, as we sort of said, right? They have this sort of, want to learn, and are really sort of, always learning, and they've got passions for things. But it's very much that you need to make sure that you don't necessarily solution sell. And there's a really fine balance, right? You can bring the outside world in, and you can talk about Web3, and you can go back up, and maybe you're going up to your, head of sales and trying to tell them about, how wonderful it's going to be in 2025 to sell our product on the metaverse. But, the head of sales is like, hang on, I've just got to hit my quarterly target, right? This stuff doesn't. So, and then they just sort of get dismissed. So the biggest bit of advice you give to an entrepreneur is probably the other thing I mentioned before. Really understand the business. Really go and spend the time to know what the business's strategy is, what the business's purpose is, what the business economic model is, what the biggest pain points are, what the biggest opportunities are, because then you can actually start finding how you can bring those, inquisitive mindsets and those sort of passion areas where they're going to have the best amount of success. And that's sometimes what deflates in entrepreneurship, right? Is that people keep coming back and go, hey, what about this? What about this? What about this? And it just kept getting no, 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 no. And that can make you very sort of deflated. Or maybe the glass is half full, or and maybe, you know, look at the other side of the coin. How about you actually really understand and then try and actually bring solutions that solve real business problems? And I reckon that's the biggest tip to give, you know, entrepreneurs when I've sort of seen success. So that's for the second group. And what about the third one? Where are we going to now? Other CVCs and VCs?
Yes. Yes.
This thing isn't easy, right? So be prepared for roller coaster ride. The highs are really high, and you know the lows can be really sort of tough. And one of the things is you really need to be resilient. You've got to actually find that throughout all of this, you get folks that, you know, we've seen that have gone into VC or CVC world and done such a good job and got through. Some of it because of luck, but I say you create your own luck too, right? A lot of that is actually things that you create along the way. But you need to be really resilient. You know, when those amazing things start to pay off, ride them, you know, try and get every bit of value out of whatever's going well. So, you know, you can create, you know, more runway or more pathways for future success. And then, you know what, if, you know, you have a few bumpy days or a few failures or whatever, you know, sometimes you've got to take your medicine, you've got to learn from it, but you've got to get back on the horse. You've got to really be able to realize that, you know what, I'll learn from this mistake, or I know what I could have done better this time and go back through, because it is a real roller coaster ride. It is full of ups and downs. And the best way to try and get through the ups and downs is try and actually just be really, really resilient. And that's easier said than done. But if you have a resilience mindset to go back in, then I think you're half a step ahead of any of the other VCs and CVCs that are out there.
When you talk about change, resilience, disruption, and looking at things outside in, it makes me so happy, Scott. So what would be your last few words of wisdom to encourage and inspire the world?
Well, that's a big question. You put me right on the spot there. Look, I know we've sort of touched on a few different themes, you know, about sort of, you know, thinking outside and, you know, bringing the outside world in, thinking global and, you know, thinking early stage and, you know, starting to talk about, you know, investing in and surrounding with people. You know, my biggest thing is just learn. Every day is, you know, a new adventure. And the way you can make it a new adventure is to learn. My biggest sort of part that I know that, you know, I'd love to be able to sit there these days and read a full book. I'd love to be able to sit there and dedicate myself to, you know, dedicated training course and stuff. Like I just, you know, wish you had those, you know, the time and to go back through. But micro learning is so crucial. You know, this is so important, right? So find the ways, you know, and they sound really straightforward and simple, but, you know, set up those basic Google alerts for all those things that you're inquisitive and passionate about, and let the web actually curate to you all of those things so you can micro learn every morning about a certain industry, a certain business, a certain, you know, technology space. Start to sit there and think about what are those, you know, digital assets and subscriptions that are must subscribes that you need to actually carve out and sort of read. All the way through to sort of leadership courses. You know, we stumbled onto, you know, some amazing little one. I'll give it a plug here. It was an AI leadership coach. It's called Bunch, and we found it throughout the pandemic. And it's 2 minutes a day of micro leadership learning, right? Like if you can't carve out a couple of minutes every day to learn, you're not going to get better. So, and you know what? Everybody has that ability to learn. And I think that's the most exciting part. And that's probably my biggest takeaway for everybody, Sabine, is you're going to make steps forward in your life, and you're going to make steps forward in your career and steps forward in anything you do by, you know, having, you know, that thirst for learning. And it's actually not that hard to do. If you sort of break it down and do it every day and try and do it as micro learning, then you're going to have hopefully a few more highs and lows along the way, as we sort of shared before. So
you won't believe, but Bench, the founder, Daria, used to do all the psychologic work for me during my accelerator.
So there you go, right? So very small world. So it is a small world, and yeah, and I did my 2 minutes of micro learning this morning. So yeah, big shout. But there you go. It's a great.
And I do
example,
the same.
right? Like,
and I do the same. So it's funny because we use the same platform. And one thing I learned also, you know, I do a lot of social media, and one thing I realized for the past probably 5-6 years, I've been doing social media is that I have to learn, like you said, every single day. Article I read, the things I want to share, I have to become master of my own topic. And for my team, I recommend to them to learn every day as well. And I invested into a platform called Udemy to actually to give them the skill set, so they all have a license of Udemy, and I just encourage them to learn. So thank you for those recommendations, because we have to remain continuous learner. We are in a creator economy now, and we need to build our own self-resilience for the future. So where do people find you?
Where do you find me? You can grab me through IAG Firemark Ventures, is the corporate CVC of IAG, Australia, New Zealand's largest general insurer. So we are in Australia, New Zealand, and Singapore, but we've got investments in all the way through to the US, and now we're sort of going global. So you'll start to sort of see us in different circles. We're recently sort of joined in and actually become part of the InsurTech UK Council. And so we're starting to, practice what we preach, what we talked a little bit before, and we've recently just joined up with InsurTech Munich hub as well, right? So you'll be able to sort of start to see us in the UK and Europe more, and obviously we've got some good presence with some of the co-investors in VCs and startup space in obviously the US and Australia and New Zealand. On a personal note, you can just find me on LinkedIn too, right? I think that's the way. There's thousands of different ways that we can sort of connect back through, and we'll keep the personal social profiles personal, but the business stuff definitely can sort of find us sort of on LinkedIn. But yeah, we can get in touch with IAG Firemark Ventures, and we're part of a bigger innovation venturing function at IAG known as the Firemark Collective, and we've got innovation labs, and we've got a futures team and an accelerator. So we think that we've got something really unique that we're doing at IAG when it comes to innovation and venturing. So at any time, reach out. Happy to speak to anybody about anything, because as we sort of said, I sort of see it as well as continuous learning for myself and our team, and if there's something that we like to do in the industry is always giving back, right? So we may not be able to be an investor into a startup. We may not be able to bring someone into our accelerator lab. We may not be able to actually sit there and, actually do something to work with them, but we can always give advice or tips or, send people. And we think that's our gift back to the industry and anybody that comes back through. So anybody that reaches out to Sabine, we're always happy to connect and have a conversation.
Thank you, Scott, for your generosity and for all your tips. This was wonderful. And I look forward to seeing you wherever you are in the world, and hopefully we'll meet very soon. Thank you.
No problem at all.